Hello, this is Coach Mike with WinningsStockCoach.com. Gonna go over the upcoming week's market overview video. That will be for the trading week starting October 6, 2014. I want to start out with the SPX. If you watched last week's video, you will have seen that this target area, 1932.65, we came real close to it. Still within our 0.5% of every bottom since we've been doing this weekly video, actually every bottom and top. So pretty nice move on Thursday after touching the bottom, and continuation on Friday. So what I'm kind of expecting here in the upcoming week is actually some topside continuation, but that doesn't necessarily mean that you won't get a little bit of a pullback from where we ended up on Friday. Quite frankly, you had quite the up move, so you need to be watching potential longs for the pullback and a positive move again, meaning get a little intraday pullback and start pushing upwards for your entries. And I also want to kind of point out the type of trading pattern that I think we could most likely replicate. First, it would be kind of like what we saw in April, with a mild pullback that was a little quicker than what we anticipated from the February low. We had a nice little up run, got into some consolidation before moving upwards again. I think if we're going to move on to new highs, that would be what we would look for. And I think based on our targeting system that have given these lows, 20, 40, 51 would be the more likely target, but we do still have a longer term target from the weekly of 20.2703 that we haven't got up into yet, so I'd want to respect both of those. Now for our daily chart, I want to kind of show you the technical chart pattern that's being displayed here. It's called a morning star. It's a 3-candle pattern, and plain and simple, this morning star, after the 3rd candle pattern's completed, it's the 4th candle's continuation that you would look for. Now, currently it's 1:50 in the afternoon on Sunday, October 5th. I don't see the futures markets yet to see an idea of where we might open up on Monday. But I do want to kind of point out what I think could be likely, and that would be a slight bit of a gap down on Monday. I don't want to even try to guess what it could gap down to. I simply want to say that after this big of an up move since hitting the bottom in the middle of the day on Thursday, that the best scenario for new long entries would actually be that slight gap down where we could take early buys on Monday morning and begin to get the positive movement on them from that point. So keep an eye. Monday morning is going to be really, really important for the SPX. And after, again, coming down into one of our target areas, members of the coaches roster, we took a few buys. Same type of strategy we've used on every market pullback, where we kind of take a few buys as they confirm themselves. We take a few more. As those kind of confirm themselves, we take a few more. It limits our risk through the process of the swing. So we probably have another 2 to 3 different buy opportunities throughout the swing to be looking forward to. So be a little patient and wait for better opportunities to be making those. And a better opportunity might even be letting it run up a little bit, but buying it once it pulls back some to then take it forward again. Over to the DJI daily chart. The DJI actually didn't come down as far as I thought it would. I wasn't looking for this Fibonacci target, I was looking for this trend line here, and it made a really good recovery. And actually one particular DJI stock that I was really impressed with on Friday was Goldman Sachs. Pretty much an $8 run from Thursday's low, so that kind of aided in this a bit. So we're going to kind of have to see, because if I switch over here to a weekly chart, and I'm just going to go to a shorter term, let's do a 2-year weekly, and we take a look at this, in reality what happened with the DJI was not much of anything. We talked last week about this support point, our support line here, The value of that was 16,943.81. Even though we dipped down below that, it was a weekly support point that we had been discussing, and we were able to, through the course of the week, dip down but close back above it. So I still want to caution using that same point as your support for the weekly chart moving forward. And if we continue in the up move, we're going to be looking for this 17,470.02 cents. And again, with this, we got right into our longer term target, right into a longer term target, pulled back pretty nicely from it. As we go back over to the daily chart, that move could give us the continuation we're looking for to the next target. But I want to have just a little bit of caution that the DJI is probably likely to have more of an intraday pullback as we move forward. And one other point I want to make on this chart that you'll see on other indice charts as well is if you look at this move and into consolidation that was made into the midpoint of September, and then a higher high that was given immediately following, we've actually come down and we've made a lower low than this pullback point here. That could give us indication that we're going to get a lower high, but if we're going to know that we're getting that lower high, we would actually expect something more around the price range 17,087.01 cent. So these target points are kind of just areas of interest. Of course, I love it when I break a target, because I plan for that target, and because I break it most of the time, it gets me even more profit. So, kind of looking at this, if it's going to make that lower high based on this lower low from the daily chart, we could actually see that under a scenario, let's say it actually gaps up on Monday, but doesn't continue after the gap up. We would want to be watching that, because that could just be another lower high that leads to a lower low, and something we would definitely want to have some focus on. Over now to the RUT, the Russell 2000, our small cap index. Last week's video cautioned to watch for potential target areas at 1083.26 and 1077.61. We kind of hit both of them, but we were able to close days above both of them as well. The other important thing to point out is after that horizontal channel we had begun trading in with the small caps, we came back, made a lower high, now a lower low. So I'm still expecting any up move to make a lower high and trade in this channel here that I have displayed. You see Thursday's low kind of bounced right off of that bottom channel line, and no reason right now to think that it's going to make some crazy breakout that makes a higher high, because quite frankly, until it breaks a point like 1154.50, which would be my target overall point if it were to replicate this type of up move to make a lower high that still trades within this down channel, it has to break that before it gets anything too excessive and crazy. But I will say this also, that so long as the RUT continues upwards, where I've said for the past few weeks that there's more risk than reward in looking at small caps right now, I would actually say that right now, if we get continuation upward, there would be better reward in small caps than in your large caps and in your larger indices. So this might be a point to be watching small cap stocks, because the fall has been more aggressive and it has traded within technical points we've been watching, and because of that consistency, we could also plan for the consistency to follow upwards. Over now to the COMP. This is your NASDAQ composite chart. We've covered a few things with this and been very, very accurate with it. We had a nice momentum and breakout point here We had a nice swing point that we came off of here, another series of momentum trades here, and then caution that the NASDAQ might overall be slightly sideways or down. That was correct. But now we kind of got to watch, because we've given up a lot. We've actually given up quite a lot, and even though we bounced up on Thursday and Friday from the low points, after giving up so much, you'd almost expect that you might make some sort of up move. The big point of concern I would have here is that we actually pull back from this prior double top point, which could be a little disturbing on this index chart, because we would then be looking at a technical pattern potentially that's referred to as a head and shoulders, where the left shoulder area would be this over here, your head would be this over here, and you would look for the highs on the right shoulder to be fairly consistent with the highs on the left shoulder. It would have been more probable had we seen the pullback and bounce off of this same bottom line point that we'd seen before, but it is still something I want to watch, because if we pull back from this point, then it'll be hard to really have a bullish outlook. The other thing I want to remind people of is, even though we've seen some earnings kind of scattered over the past week, 2 weeks, the real earnings season will be starting kind of the week of October 13th. Typically the big heavy earnings, where you see several stocks having earnings each and every day, pre-market and after hours, starts with that first week where the financials report, and that's going to be the week of October 13th. So I do plan on the potential that this week ends up kind of being a little bit weird, because as we get into the earnings season, we'll start to get an indication of how things will want to either pull back before the earnings are released, which is very common, run up into the earnings, which is very common, or develop quite the horizontal consolidation channel that gives you a range break play into those earnings announcements, which is also very common. So, this week ahead could be a little wishy-washy, but I do think, based on the support points that we saw hit, the target areas we had discussed already on the RUT and the SPX, that we do have some potential for the long trades there, and I think that potential is going to outweigh the fears you may have of other situations. Anyway, this is Coach Mike with WinningStockCoach.com, encouraging you to plan your trades, have an understanding for how the indices can affect individual stocks that you trade, and also welcoming you to check out the coaches roster at WinningStockCoach.com. You can email me, coach@WinningStockCoach.com, with any questions you might have. God bless, and good luck in your trading in the upcoming week.